Welcome back. It's a green morning across Asia, and markets, depending on which one you're looking at, could be up between 0.25% to as much as 1%. And the Hang Seng is running away 1% higher over there. But the Japanese market's not too bad, 0.5% up. And mainland China also chipping in with some gains. So the implied open is telling us that the bulls will be back to their winning ways, at least at the start, expecting almost a 100-point pop. There you go, perfect 100 at the open. Now, what about individual stocks? Lots and lots of earnings to go over. So let's straight away get to the CNBC TV 18 list of top stocks to watch. Guys, morning to all of you. Ria, let's start with what else? BEL. Very high expectations from all these defense companies. Has BEL delivered?
Well, yes, good morning. BEL has reported a good set of numbers yesterday. The net profit has been above our expectations of around 1,800 crores, coming in at about 2,127 crores. Even on the margin front, they've outperformed, coming in at 30.8% versus our estimates of 25.6%. For the full year FY25 as well, revenue has surpassed the company's guidance of 15% year-on-year growth, coming in at rupees 23,769 crores, which is a growth of around 17.3% on a year-on-year basis. Even the EBITDA margins have come in at 29% versus 25% in FY24, up around 400 basis points, and again surpassing the company's guidance of 23 to 25%. The order book position of the company right now is at 71,650 crores, which is about a 5.5% decline over the previous year. Even on the order inflows front, the company has underperformed. They had reported this in their provisional update as well. The order inflows have come in at rupees 18,715 crores versus the guidance of 25,000 crores, so they've fallen short on the guidance on this front. And the order inflows are also down around 45% on a year-on-year basis versus FY24. But since they've outperformed on the revenue and the EBITDA margin front, we're going with the green for BEL.
Thanks a lot for that, Ria. Well, let's hop across and get in. Vivek, he's here to tell us about the other big name, which is Power Grid. Morning, Vivek.
Well, good morning. Power Grid, largely in line to slightly muted set of numbers when you're looking only at the P&L as far as Q4 FY25 is concerned. Revenues higher by 2.5%, EBITDA higher by 1.5%, and when you're talking about the margins down 100 basis points on a year-on-year basis. Profitability down 0.6% on a year-on-year basis. That was a miss versus our poll. But what we will be looking at, especially FY25, will be two numbers. Number one is the capex, and number two is the commissioning. So the consolidated capex has been stronger than what the company had given at the end of Q3. They had given a guidance of 23,000 crore. The number we understand has come in at a little over 24,000 crore. So that is a positive. However, when you're talking about the capitalization, that has been weaker. We understand that it has come in the range of 8,700 to 9,000 crore versus a guidance of almost 18,000 crore. So that will be the key question investors as well as analysts will ask in the call today, given the fact that what has led to the delays as far as the commissioning is concerned. Overall, when you're talking about two important developments, the company said that they will exit two JVs, one JV with Torrent Power, the other JV with Sikkim Power. So overall, expect some pressure on the stock today, at least till clarity emerges as far as the delay in commissioning is concerned.
Okay, all right, Vivek, thank you very much for that. But IRB Infra is on your radar, and of course, we'll speak with the management later. NLC India as well. Take us through those.
Well, that's right. So IRB Infra, when you're looking at the P&L, slightly subdued, but toll revenues as far as FY25 is concerned has been quite strong. So revenues higher by 4.3% on a year-on-year basis, EBITDA higher by 12.2%, EBITDA margins expanding almost a little over 200 basis points, and profitability higher by 13.5%. Now, when you're talking about the BOT as well as the TOT revenues, it has come in higher on a year-on-year basis. And when you're looking at the order book is quite strong. The order book is in excess of 30,500 crore. But what is it that the street won't like? The street will not like that the EPC portion of the order book has actually gone down quite drastically. And this is something that we will need to ask the management, what is it that has led to such a significant shortfall? It appears as though tendering activity has not been very robust as far as FY25 is concerned. FY26, we will need to look at the bid pipeline as well as the tendering activity. Now, talking about NLC India, a lot of one-offs, especially given the fact that this is a regulated entity, but overall a good year as well as a good quarter. Revenues higher by 8.5%, EBITDA higher by 43%. But remember, as far as EBITDA is concerned, employee expenses this time around was significantly higher, depreciation higher as well, and other income this time around was quite muted. So profitability, there was significant one-off items, is up almost 4.2 times on a year-on-year basis. But remember, there are multiple one-off items as far as the P&L is concerned. Segmental revenues, mining revenue is down 8.3%, but power generation revenues is up 9.5%. expect both of these stocks to end the green today. But IRB Infra, quite a few questions to ask the management later on.
And we'll definitely do that, Vivek. Don't you worry. Now that you've told us all the numbers, we will have Mr. Anil Yadav from IRB Infra joining in to talk about the company's performance and the outlook. All right, let's move on to some numbers coming in from the oil and gas space, Petronet LNG as well as Gujarat Gas. Sud is here with us. Morning, Sud. How do they look?
Morning, Surabhi. So for Petronet LNG, despite the adjustments, earnings are looking largely better than estimates. Revenue has increased by 1%. Reported EBITDA was up 45%. If you adjust impairment gain, it was up 7%. Reported margin has come in almost 400 basis points higher at 12.3%. Adjusted margin was at 10.4% versus 9.8%. CLSA, though, maintains underperform call and target is pitched to 270 per share. It says core performance was a smaller beat to expectations, but volumes were 8% miss. Earnings call is at 11 a.m. We'll wait for more details. For Gujarat Gas, I'm going with red. Earnings were largely in line, but industries segment, which forms more than 50% of total volumes, have seen a decline of almost 21%, while CNG volumes were up almost 4% on a sequential basis. Talking about headline numbers here, revenue was down 1%, EBITDA has increased by 18%, and margin was at 11% versus 9.2%. Nomura maintains reduced call and target is rupees 470 per share, and CLSA maintains underperform call and target here is 385 per share.
Okay, all right. Thanks a lot for that, sir. Well, going back to Ria, she's here to tell us about DLF as well as PI Industries numbers. Ria?
Well, yes, both PI Industries and DLF have reported quite a good set of numbers yesterday. First up, for DLF, the bookings in Q4 have grown by around 39% on a year-on-year basis. Even collections are up by around 51%, coming in at rupees 3,320 crores. For the full year FY25 as well, the bookings value is now at rupees 21,223 crores, up around 44% over the previous year. And this is versus the company's guidance of rupees 17,000 crores, but they had surpassed this in Q3 itself. Collections have also jumped up by around 36% over the previous year. Launches for FY25 were around rupees 40,600 crores versus their launch pipeline of about rupees 36,000 crores. Going ahead in the medium term, they have a launch pipeline of about rupees 73,900 crores. Moving on to PI Industries, we've seen the net profit going down by around 10.5% for Q4, but the revenue and EBITDA have gone up by around 3% each. In the agrichem exports business, we've seen a 5% decline overall, but the volume has gone up by around 7%. The domestic branded revenue, for that has grown by around 21% on a year-on-year basis, and the volumes have also gone up by around 24%. The FY25 gross margin has also improved to 53% due to a better product mix in this year. Going ahead, they've said that the global biologics revenue is expected to grow around 5 times over the next 5 years, and in the pharma CRDMO business as well, they're expecting to achieve over 75% revenue growth in FY26 itself, with improved margins. So going with green for both of these stocks.
Thanks very much, Ria, for that. Well, let's talk about Redington and Eris Life. Vinny's got details on both. Vinny, morning.
Good morning. Starting with Redington, decent set of numbers that's come in from the company. Muted growth sequentially, but on a year-on-year basis, the company has managed to see an 18% growth. Margins have remained largely stable at around 2.3%. Whether you look at QOQ or YOY, it's around that mark. So yes, not a bad set of numbers coming in from the company. Margin stable, profit growth, sharp growth in terms of profit. That's why we're expecting a bit of a green for Redington. Moving on to Eris Life Sciences, now largely inline set of numbers come from the company. Steady revenue growth. Margins have seen a growth of almost 36% sequentially as well as YOY. But what's interesting is the commentary for FY26. A very good commentary for FY26. The management has guided domestic business EBITDA margins at 37%. Export business EBITDA margins at around 35%. They're expecting 800 to 1,000 basis point EBITDA margin improvement also in the insulin business. So that is something in terms of the commentary which is positive, and that is why we could see green coming in for Eris Life Sciences as well.
Okay, all right. Thanks a lot for that, Vinny. Well, let's do a quick recap of all the top stocks that we're looking at. The ones with positive news flow: BEL, PI Industries, DLF, IRB Infra, NLC India, Petronet LNG, Redington, and Eris Life Sciences. While stocks with negative news flow include Power Grid as well as Gujarat Gas. Well, let's get a check on the commodity space. Manisha Gupta joins us to help us out with what's going on there. Morning, Manisha.
Morning, Nigel. I'll start with the crude oil prices, which are the only sector, by the way, which is trading on a firmer note. This is on the uncertainty of progress of U.S.-Iran nuclear negotiations. U.S. is demanding a complete halt to Iran uranium enrichment, which is not happening, and that is what is leading to some support coming in for the crude oil prices. But apart from that, almost everything else is trading slightly on the weaker side. I'll start with gold. It did gain 1% overnight after Moody's downgrading U.S. credit rating and U.S. Treasury is shooting up. But at this point in time, it is all about the U.S. president's statement talking about the Russia-Ukraine being on path to ceasefire. Well, that has led to the safe haven premium going out. You have the gold prices trading 0.5% down. Silver is trading in the negative as well. And then apart from that, when you look at the Chinese data, well, we did see those numbers come in on the weaker side as well. The industrial production and retail sales, fixed income investment, all of that has been on the weaker side in China. That's weighing on copper. Aluminum fell 1% overnight. So barring crude, all precious metals, base metals trading in the negative in Asia.
All right, Manisha, thank you very much for that. What we'll do is we'll take a quick commercial break here. We're going to come back with the management of Quest Corp. That's a staffing company. We discuss their fourth quarter numbers and the outlook going forward. Stay tuned.